All right, let's begin then. So, Chris, could you start by giving us a little bit of background on yourself and your startup JudoLaunch, um, and 22X?
Totally. Yeah. So I came from the world of science, majored in physics, and did electrical engineering for the solar industry until realizing that to control my own destiny, I had to learn business. So started a business in the e-commerce sphere and grew that with no outside funding to a seven-figure international business before realizing that I could create a tech platform that allowed other businesses to expand internationally and scale much faster. So that's JudoLaunch. JudoLaunch is a tech platform that allows e-commerce businesses to expand to new countries really fast. And JudoLaunch was accepted to batch 22 of 500 startups last year, or in 2017, a couple of months ago. While we were there, just a couple of days in, over beers, my friend Jake and two other founders and I were talking about the fact that early stage tech funding from ICOs had surpassed early stage tech funding from venture capital. And we were looking at this graph on his phone, like being like, what the hell is going on? It was like typical, hockey stick growth of funding from ICOs. So we were like, all right, could we do an ICO? And then we were like, nah. And then we were like, wait, we could. We could do a security token offering. And we just fleshed out this random beer over beers idea, which became 22X. And the concept is we took 10% equity from all of the companies in batch 22 of 500 startups and put it into a special purpose vehicle that we then tokenized to allow investors to get exposure to top Silicon Valley startups with one investment. So it's one token, an investor buys a token, they get equity in 30 top tech startups with that one purchase. And the reason that it matters that it's a token is that there's a bunch of things we can do with a token that you can't do with a fund, a typical VC fund, or angel investing in individual deals.
Okay.
So every time there's like an exit event in one of these underlying companies, if one gets acquired or it IPOs, our software scans the blockchain, finds all wallets that hold the token, dissolves like a portion of their tokens, and then issues distributions to all of them automatically. And that's just something you can't do, with normal funds.
Okay. All right. So let me also ask you this. So you just mentioned that it came up when you were having a beer with a couple of buddies, right? But
Yep.
how did you get together with, 29 other startups and, all come together and agree on, making a ICO? Was it difficult?
Yes, extremely. Like when that was like the initial idea, but to make this a reality, it took all of the founders to make it happen. We got a ton of like no's and you're crazies and stop calling me. So, like we worked with a handful of different law firms, consultancy firms and advisory firms, marketing firms, PR firms, like partners, influencers. We just dozens and dozens of partners before we came up with the final configuration that ended up allowing us to launch it, which we did 2 weeks ago. So the problem was security tokens were not a thing. That we didn't know of any except for two that were coming online like as we were planning this. One was Blockchain Capital and one was Science Accelerator. Every other ICO was not considered a security, or at least the issuers of the token didn't consider it a security. The SEC maybe was still on the fence,
Right.
but so a lot of people didn't want to touch us with a 10-foot pole because they're like, whoa, security, whoa, no, 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 no. We like it nice and unregulated over here in the utility token space. So it was really tough, and it took a lot more legal back work to structure this from a legal standpoint. And we went through every potential legal structure: a Reg A plus offering, a Reg A offering, a full-on public offering, registering as an investment company. And then what we ended up finalizing on was operating under the Reg D exemption of the Securities Act, specifically Reg D 506C, which allows us to solicit, and then doing a Reg S offering for the rest of the world.
Okay, so actually about that, so you're just talking about, all the paperwork that you had to go through. So I also noticed while I was going through the website that, and this is kind of one of the tougher questions here. It's really the only one. But so I noticed that 22x tokens, so they can't be traded until you hold them for at least 12 months. So do you think that this poses a risk to potential investors?
So the 12-month lockup is applicable only to U.S. citizens. And the reason we have to do that is because it's required by the SEC under if you use exemption Reg D 506C. So we were required to do that legally. It wasn't actually our choice. Right. However, we do support it in a way, and it doesn't bother us because this type of investment tends to be more long term. This is a way for like a crypto investor to diversify their crypto portfolio. Like they might have a portfolio of dozens and dozens, maybe even hundreds of coins, that they think, okay, some of them might 1000x or a couple might 100x, and then most of them will end up being completely worthless in the new global economy. For us, it's very unlikely that our coin could ever become completely worthless because the underlying assets already have value. All of the companies are real companies making revenue with user growth, traction in their markets, many of them with revenue in the millions. And so there's already real assets underlying this. It's not banking on a future global economy that doesn't yet exist, and that's just been written down in a white paper. So it's okay to us because we expect the token holders to have a more long-term view for our token, rather as opposed to the utility token space.
Okay, all right. So so speaking of which, obviously, you guys came together through 500 startups, which by itself is being selected by them is a major feat. They only accept 2% of their applicants. So what do you think, so obviously not only were you the founder of JudoLaunch, one of the successful startups, but you worked together with 29 of the 36 of the batch that, of your batch to complete 500 startups. So what do you think JudoLaunch and the other startups in 22X have in common that made them successful?
Wow, that's an awesome question.
Thank you.
I think at this stage of a company's growth, like the seed stage, it always comes down to the people. I think the founding team and then the early employees, because later on it might come down to structure, or the culture or whatnot, but at that stage when it's a couple of founders and a couple of employees, it's those human beings behind it. So it's I feel like it's not like comfortable to talk about because it doesn't sound businessy or strategy style, but like it has to be humans that have a huge amount of intelligence and grit So they need to be able to like have enough intelligence to understand the market they're attacking and be able to build a valuable product around that. And then they have to be emotionally stable and gritty enough to power through when things get really, really bad, which they do frequently at that stage of a company's growth. Every company will face their own potential demise, multiple times, probably dozens of times between when they're founded and when they hit their Series A. So I think those two things are probably the most, I'd say every founder in the entire batch has those two things as fundamentals.
Okay. All right. That's very insightful, actually. And so, another question that I wanted to ask you is, so why did you guys, you brushed on this a little bit earlier, why did you ultimately decide against venture capital and also crowdfunding and choose an ICO instead? Why did you think that, this would be the best way to raise funds?
Yeah. Well, I'd be lying if I told you that there was not an element of it that was the hype of the period of time.
Right.
Because we saw it and we wanted to do it before we even understood it. Just because we saw that graph and we are like, what the fuck is going on? Like this, there's some kind of huge shift going. And it reminded me, because I read Jeff Bezos's biography like a couple months ago, and it reminded me of what he said in the early internet days when he saw that the internet was growing at 21,000% year over year. And he was saying nothing grows that fast. And we were looking at this graph of ICO, early stage tech funding, and I was thinking the same thing. I was like, nothing grows that fast. That's just ridiculous.
Right.
So that's what got us interested. But then when we did further digging, the reason the idea didn't die and the reason that it did come to fruition after our initial excitement is because it turned out to actually be a better vehicle for funding than us, going out on our individually. So coming together brought us a ton of value and created a ton of value because by bundling these assets, we actually decreased the risk of investing in that class overall, just from diversification on its own, making it a more attractive investment and opening the door to a different class of investor. So, if it's true, which is the talk on the street, that seed funding is contracting in the Valley, then, this was our ticket to be able to access a different class of investor entirely. So instead of targeting, individuals, angel groups, angels, which is, normally how, or maybe micro VCs, but not so much VCs in this stage at the seed stage funding. Instead of targeting those folks, we ended up targeting funds, crypto hedge funds, family office funds, crypto whales, crypto whale groups, and crypto syndicates. It was just a totally different, investor group, that we could open it up to. So that was added value to us. And we, in parallel, discovered, just by uncovering this opportunity, added value to the investor themselves. Beyond the diversification, they also get a more liquid exposure to this asset class. So they can enter and exit their position in the fund whenever they want, after the 12-month lockup period, of course.
Okay.
So if you're a normal LP in a venture capital fund, your funds are locked up for 10 years, first of all. You have to put in a large minimum check. They take a 20% carry and a 2% maintenance fee per year, and you're left with whatever's left over. But with us, the investor gets no carry, a very low maintenance fee. All the funds are deployed immediately to the companies, so they're not held in storage like a VC fund where give me all the money and then I'll deploy it to companies as I find them. Right. For us, it's like, here's the companies, we're going to raise the fund and immediately deploy it so those companies can grow, and your investment, the net asset value of your investment, can start paying off immediately. And you get all the gains. because we're not taking any carry. So it just ended up being like a much better value for everyone, for the companies, for the investors, for everyone involved.
Okay. And so touching on that, so 22X is currently in pre-sale. So how has that been going? What kind of traction have you guys seen so far?
It's been going really fantastically. We didn't know what kind of reception we would get because security token offerings are so new, but we were lucky enough to get a lot of coverage and attention surrounding this. So yeah, we've been getting hundreds of applicants per day. We can't publicly say what the actual amount that has come in, but yeah, we get applicants from all over the world. The majority of them are from outside the U.S. actually.
Oh, okay. That's
Yeah,
interesting.
so there's been a ton of interest and a ton of inbound.
Okay. And so obviously, that cryptocurrency hasn't been doing so great lately. But you guys have a different type of token. It's backed by assets. So unlike Bitcoin, which can fall to zero, the odds of that happening with you guys is pretty low unless you all went bankrupt.
Right.
But so has the recent crypto crash, do you think that has spooked potential investors? Has that affected the current inflow of investors? And what do you think the impacts of it will be in the future? Kind of a loaded question, but.
No, yeah, dude. Honestly, I mean, yeah, to be honest, it did. It did have an impact, but it had an impact in both directions because I call we call actually every applicant that puts in an application for a significant amount, like a large amount, because we want to get feedback from them and lead them through the process. So I have a lot of conversations with potential token investors and actual token investors, and what I've been hearing from them is some do say, yeah, this crash is making me just want to hold on to what I have and not spend it. And I'm just kind of freezing my portfolio. So some do say that. But then there's others that it actually affected them in the opposite way, where they're saying, I'm looking for a safe place to put my crypto, something that is more stable and less volatile. So like this fear played in both directions to us. So I think the net effect of it was just zero
Right.
because some people, it made them actually not want to put into 22X, and other people, it just actually encouraged them to more quickly contribute to 22X. So yeah, weirdly, it ended up having like a zero net effect.
Okay. And as time goes on, you think that that's going to, stabilize? Or do you think that investors are going to start, disassociating 22X with, Bitcoin and those other types of tokens, which are obviously completely different? Or do you think that it'll keep on being affected by these ups and downs in the crypto market?
No, over time, 22X will be much less affected by the overall crypto market than a typical coin. And so it will have an effect because it's a token and it will be on exchanges. And so, people's buying power or drive to sell will have an effect. But that actually is a benefit to savvy investors who are actually, looking into the value of the underlying assets there. Because a savvy investor could look in, say, if the market starts to drop, a savvy investor could look underneath the hood and see, oh, okay, so WayPay or Payment24 or any of the other companies just raised their Series C, or it is rumored to IPO in the next year, and they could say this market is grossly undervaluing this token. I'm going to get in. So it's actually to smart investors, any kind of volatility would be good for them. For just day traders who don't want to look under the hood at all, they might get their shirts taken if they hold their position for too long.
Right.
Because I mean, the thing is about 22x, unlike another token, the value actually gets delivered to you even if you never trade it. You could buy a token and just hold on to it forever, never trade it at all, and just take all the distributions that come as the underlying companies have exit events, or any kind of payouts, dividends, acquisitions, IPOs.
Okay.
You could collect it. You could just hold it and collect it and never trade it if you wanted to. It's up to you as the token holder.
Okay. All right. Yeah. So I also wanted to ask you, do you have any advice for a startup trying to raise capital in this day and age?
Yeah, definitely. I would say it sucks, and it's kind of maybe cliche at this point, but I've just found it's so true that like the sexy words or the sexy glean really does help. Like if you're in a market that's really unsexy, you actually are, unfortunately, you really are less likely to raise than your colleague who's in a more sexy market. Sexy being blockchain, VR, AI, big data. You just rub these words on a company and
Right.
it just automatically has better chance of raising at that stage. But that aside, that's not real advice. I would go back to the fact that, and I'm just going to speak from my experience because this is seed stage that we're at.
Sure.
So this would be for people raising seed stage, not later stage funding. For us, it really does still come down to the people, the humans. Later on, it comes down to so many other things like, the culture and the market and the structure and your strategy and the approach and your forecast and all of that. But at this stage, someone is actually investing in the person more than they are the company. They want to see a huge addressable market, yes. They want to see, a product and some traction, yeah. But at the end of the day, it really is like you as a person that they're investing in. So if you can show that you're smart and that you're gritty and that you have a big market and you have the ability to provide solutions for that market, you shouldn't have a problem.
Okay. And so, real quick, how can potential investors learn more about 22x?
It's an easy one. Yeah, 22xfund.com. That's where all the information is. We've got an investor deck that's like a 3 to 5 minute read, a white paper that's like a 20 to 30 minute read, and then we have a legal memorandum that's like a 2-hour read if you wanted to dig way into the weeds.
Okay, perfect. And so, before we wrap up, uh, is there anything that you'd like to share with our audience?
Yeah, I mean, I'll just use this last moment to say that personally, my motivation, like my personal motivation for being involved in this, is because I think that it's a step that that humankind is taking to change the way our global economy is structured. So I put so much energy and time into this project because I personally feel that it's one of the most significant things that I've contributed to in my life. I think that everything will be tokenized and that smart contracts will rule, the entire global economy in the future. Um, and we're just like taking little baby steps right now, and it's still like the dawn of day one. It's like day one and like the sun hasn't even risen yet. So people that think that they're late to the game, that they missed the boat, they missed the train, that's not even close to the truth. Like if you just are around, you're going to be fine. All you have to do is be around. Like you don't even have to be, smart people, dumb people, like everyone's going to make money in blockchain and crypto and be successful, just by being around, because it's that big of a game changing technology and stage of, human society's evolution.
All right. All right. Thank you for coming on, Chris.
Yeah,
Um,
dude.